Well, hello everyone. Welcome to Trading a Smaller Account. Welcome to a fresh new week in the markets. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab. And today we are going to talk about swing trading, my friends. We are going to talk about bullish swing trades. This is an intermediate level class. I do tend to move fairly quickly. So what are we going to cover today? Well, today is brought to you by the letter A. We're going to place 3 example trades, all ticker symbols starting with the letter A. And it wasn't that I didn't go through the whole alphabet. I did. But those look like the best candidates for our examples today. So, so brought to you by the letter A. Also the numbers 1, 3, and 4, because we're going to place 3 new trades. We're going to review a trade that hit a target, kind of stunningly hit a target very quickly. And then we're going to very quickly review 4 trades that are currently happening, that we currently have on in our portfolio. So I hope everybody has their sleeves rolled up and you are ready to go. If you aren't following me on X, consider this your formal invitation at Barb Armstrong CS. We also have the privilege of having the fantastic Mr. Scott Thompson in the chat. You'll want to follow him as well. I have learned a ton from Scott over the years. When I was a client, he was one of my favorite instructors to watch. So I feel privileged that we've got him with us in the chat today. So at Scott Thompson CS, you won't want to miss following him as well. You can also follow me on LinkedIn now. So wander over to LinkedIn and check out what I'm posting there. Just as a quick reminder, options do carry a high level of risk and aren't suitable for all investors. We're going to do both stock trades and option trades today. We use the Paper Money software application on the Thinkorswim desktop platform. So if you're wondering where we're placing this trades, that's where we are. One of the nuances or differences between Paper Money and a live account is that short option positions will never be assigned early. Our focus today is going to be on new trades on more long option positions, but this is something that can impact our account as we do a lot of vertical spread trades. We're going to do a super fast market overview. I like to point people to Kevin Horner's Trader Talks. Today it was 2 guests, Brent Moores, who does a great job, and Ray Kimbrell. But that's a 45-minute in-depth market overview. I encourage you to check that out. And then, like I said, we're going to place some new example trades and manage some of the trades in our portfolio. And just as a reminder, if you've never been to a live event, I love these things. And so, how we often, when we post on X, we'll say not a recommendation. I would say this is a recommendation. If you live anywhere close or you'd like to visit these places, then, you may want to put these on your radar. It's how I got introduced to the world of investing and trading. And it's been life-changing for me. I wasn't aiming to end up as a coach, but I've now just celebrated my 10th anniversary on this side of the camera. So the next one is Chicago. There's actually one in Santa Clara, in between, I think, Chicago and San Diego. And it's not on this chart because we're already pretty close to being maxed out. So if you want to come to these things, sign up quickly. Like if you come to Santa Clara the day of, like we'll register you on site, but you don't want to have to sit on someone's knee. Like we wouldn't actually make you do that, but they are very popular and they're free to attend. So highly recommend that you check those out if you haven't done so already. So the S&P 500, we were officially in correction territory. Chicken Little was out running laps, and there was a lot of angst. And for those of you who hold long-term positions, it's not a good feeling when you see your positions, being hurt. But I mean, we ended up with, again, this deep V pattern. We came up, hit a new all-time high on the S&P 500 on Friday. Today we have this bearish Harami pattern saying, we could be due for a little pullback. Now, that could be a bull flag setting up. We won't know until it happens. But are we surprised? Yeah, I would say no. Because, so if I go from here, this top, down to here, we've had a 13% rally in 14 trading days. Like, that's pretty extraordinary. So, are we shocked that we're getting a little bit of a pullback today? I say nay. Yeah, that's and the same thing, with the NASDAQ. So if I replace this line with this line, hit a new all-time high again on Friday. Again, a 17% move in 14 trading days. So, taking a bit of a breather. The Dow, are we looking at variations on a theme here? Not hitting a new all-time high on Friday, but it did have a very big day on Friday. And again, up pretty dramatically, 10%. And then the Russell, at least when I looked at it this morning, it was still up. And it hit an all-time intraday high on Friday. If this were closing now, it would be a new all-time closing high on our small caps. All right. And then if we come over to our watch list and we say, okay, and somebody said, like, in one of the comments, and I do look at comments if you're watching in the archives, and I do go back and look at all of the comments in the chat. I keep my eye on it as we're going, but then I'll go back and reread them all at the end of the webcast. But with this Dow, somebody it made a comment and said, "How can I find setups?" Well, I link my chart to my watch list, and then you can very quickly go through looking for examples. So Apple may or may not be an example today. And then you can, bring up the S&P 100, or you can bring up the, NASDAQ 100, and you can, pretty quickly click through from, one to another. Okay, so that's just a quick way. Okay. Yeah, somebody said a mocktail, cheers for 10 years. Yeah, thank you for that. I know it's noon somewhere. It's still a little early. Okay, so, but we came over to the watch list to just bring up our sector indices. And, I just re-recorded a quick thing on how to customize a watch list and add scripts. So you can go to the trade management mini sessions for that. But if we look at the last 3 months, what sectors have been the strongest? Real estate, energy, and materials. And then utilities in fourth place. But like the last 4 weeks, everything has changed, right? So all of a sudden, energy in the last month is at the bottom of the barrel, along with utilities. And technology is taking off. Consumer discretionary, materials, and communications. And we'll see that reflected in our choices today. And sometimes, what we see is that the leaders in the 3-month realm are the same leaders in the 4 weeks. But, there's been some sector rotation happening. Yeah. So there's a quick and dirty on market overview. Okay, so let's come and first we'll look at our number one, which is the stock that has, or the trade that hit a target. Oh, I'm in the wrong account. This is small account. So we started this year with 25,000, which is what we're calling a small account. Right now we have almost 15,000 sitting in cash. And we put a trade on Friday, a short put vertical, and it closed out this morning. And so I was kind of surprised because usually short put verticals don't close out that quickly. We opened it for $1.25 and it closed out today. Our target was to close out at 24 cents. It got filled for a nickel. So as much as I'd like to say I'm just like simply brilliant and I was expecting this, this could be a bit of a paper money fill. But the net of it was we got out of this, not counting transaction fees, because we paid $5 to buy it back to take our risk off the table. We netted $120 on this. So we call that a base hit. For those of you who are baseball fans, like, our goal in this class originally was to make $100 a week, pretending we wanted to try and generate income from this modest size account. We've upped it to $200 a week. So that puts a good dent in a $200 a week target, right? And then how much were we risking? Well, we were risking $5 minus the $1.25. So we were risking $3.75. So if you get out your calculator, I did the math ahead. Where did I do the math? Oh, right there. That was a 32% return on our risk. Okay, so that's a success. Yeah, and somebody's asking if we can review AMD and NVIDIA, and absolutely. Those are two of the four that I wanted to review. So, oh, just a sec. Clear all my drawings. So let's go look at, so what we did with AMD and NVIDIA, you'll see this is under our Iron Condor group, is we were trying to leg in. And so we put the short call vertical piece on. And here was our trade on Costco, just for you visual people. So we saw it trading in an upward trending range. We put the trade on here on Friday. And it hit the target Monday. And this is unusual for a short put vertical unless something gapped up dramatically. But we got out right at the market open on this. Okay. Okay, so that was that one. So let's go look at NVIDIA. So NVIDIA, and remember, support and resistance is a range. We've done several Iron Condor trades on NVIDIA as it has, since last September, we look at a 1-year chart. Since the middle of September, it's really been trading in this range between about 170 and, 195-ish. And it had one breakout, turned out to be a fake out. And so it's now come up and breached that. And we put this trade on this day. And so, in truth, this may not have been the best day. If we're going back and doing a postmortem on this, we should have waited until we had a red candle, because this vertical, we may have decided then to put our strikes higher and we would have received more for them. But now it's kind of pulling back. And if it just pulls back for this one day and bounces, then we exit the position, because we weren't expecting this to go up and then find support. This time when it broke out, it kind of came down, fairly quickly. So if that doesn't happen, then we'll exit this trade. And CRM was the other one, or no, AMD. AMD was the other one where, it's been in a sideways range. I didn't indicate which day we put this on, but we put this on sometime in the last week, and it's come up and it's pulling back today too. And again, because this is a range, will this support level hold? Now we position size, so if it doesn't work out in our favor, it's not going to blow up our account, but we're down 167 on AMD and 120 on NVIDIA. Now, both of these we're getting a little bit back today. But we're going to watch it. And if it bounces, like if we were to close this out now, we're at 322. We could lose another $180 on this, because our max loss would be if this got to 500 or $5. And the same thing on NVIDIA. If this got to $5, that would be at our max loss. So, we have a much longer way to go. So if it looks like that resistance level isn't going to hold as a resistance level and it's going to become a new support level, then we'll just say, you know what, we were wrong. We were mistaken about that. And let's take a little wound rather than a bigger wound. Okay, so that's what we're going to do. We're going to hold, but now we are watching these daily, watching like a hawk. Okay. Okay, so let's go and look at our first A, and right at the tippy top of our alphabet, Alcoa. and Alcoa, I mean, up 25% year to date. This stock has gone from a year ago, $22 up to a high of 75, now trading at 66. I'm not a mathematical genius, but 22 times 3 is 66. Like, that's extraordinary. And it came down to this 30-day moving average, which appears to be acting at this moment as a support level. And we had this doji pattern where the bulls and the bears were duking it out, and the bears took it down and the bulls took it up, and it closed with a pretty small body. And today it's moving to the upside. So could we do a swing trade? Remember, I said it was going to be kind of swing trade day, right? Yeah, so somebody's saying, what about Microsoft? I will look at Microsoft and CRM. Those are the other two we're going to look at today. All the ones that are on the struggle bus. Well, in our account. So if we looked at this and we said, okay, this is bouncing off a support level. This has been in an uptrend. It went through a period of consolidation, right? Broke out, pulled back. So we've got like this bull flag type pattern happening here. Could we set a target of, say, 75 here? And so I'm just going to call this a swing target because we're going to do two trades. We're going to do, and this is a class, if you were doing this in a live account, not that, we're not suggesting you do, we're suggesting you follow along in paper money. But if you did a swing target, you could do stock, right? You could buy shares of stock. We don't have to buy 100 shares. And in fact, we can't buy 100 shares because our max position size in this account is 5,000. But we could buy, 74 shares, and put a $75 target on it. There's something that sounds kind of like alliteration there. But, so if we get in here, we could do that. Or if we don't want to tie up 5,000 in cash, we could say, well, I could buy a call and put this as a target. And it might just start skipping up. Like in an average day, this stock moves about $3.50. And we're looking for, 66 to 75, about a $9 move. It could move up by the end of the week. And it could take 3 weeks. So, and earnings, it missed on earnings. But, and so if you want to, I like the way you're thinking here, whoever typed that in. But, when I came and looked, they lowered the price target, Riley did, but they lowered it to 92 from 96. 90 is at the tippy top of our chart. We want to trade it up to 75. And it's saying here, they missed on Q1 results, but they're expecting a better second quarter. So it looks like it's rallying. And remember, when we looked at our watch list, what was one of the sectors that was strong in the last 4 weeks? Materials. And what kind of stock is this? That would be materials. It's bauxite, aluminum. Canadians say aluminum. Some people will say aluminium. Yeah. Anyway, there we go. So we're going to come out to our trade tab. And the first one we're going to do, we're going to say, well, I'm a big fan of know where you're getting out before you get in. So if it goes according to plan, we want to get out at 75. If it doesn't go according to plan, as I like to say, a little tongue in cheek, in the highly unlikely event that we're wrong, and it won't be the first time we're wrong, if it pulls back, if it goes 3% below the low of that day, the 63.03, was that this day? Yeah, 63.03 times 0.97, that would be a 61.14. So that's where our stop is going to be. So we're going to come to our trade tab. We're going to right click. We're going to buy custom with an OCO bracket. And we're going to say, hey, when this gets to 75, ring the bell. Cue Steve Miller, take the money and run. We're going to, take the money and run. And if it goes down, to 61.14. We also, we may lower the flags, but there's no sense in hosting a prolonged pity party because sometimes things don't go according to plan. And we're aware of that. That's why position sizing is a rule that we don't mess with. And we're going to say we want to buy 74 shares. So if you're math averse, and I like to, every time I do something mathematically, there's an opportunity for error, being one of those pesky human beings. So, if it hits our goal, we're up $8.43 a share. If it hits our stop, and there's no guarantee, if it gaps up or gaps down, we could be out at a higher level, yay us, or out at a lower level, boo-hoo. But that could happen. We're down $5.43 a share. And so we're going, okay, 543, we can risk up to 500, maybe 550, 543 times 75, it's $4.07. So even if it gapped down and we got out a little lower, we won't have blown up the account. So we're going to put this in our stock with targets, and then we're going to compare this to a long call with a same swing trade target. Okay. And then what's the position size here? 49.24. We could have actually done 75 shares, I guess. So fire in the hole. Okay, now if we wanted to do this as an option trade and we wanted to do a long call, we could come down here to the 70 strike. So that's the at the money strike. And if this stock goes up by $1, what Delta tells us is the value of this option would go up by 47 cents or about 10%. And so, we're looking for this to go up to $75, so about $8.50. Now, we have time working against us, so we want to come out to June. And why is that? Because we want at least 20 days plus the number of days that we think it may take to get to our target. So if we come out to the May monthly, time decay is going to start accelerating. And if I change this to our delta gamma theta, like our at the money strike here was 70, I think. It's going to be less expensive, but because we have less time, but theta is chipping away to the tune of 8 cents a day. Okay. And then if we come out to here, it's 5 cents a day. And this is not 5%, it's 5 cents on an option that costs twice as much. So it makes a big difference. So we're trying to minimize, the effects of time. Yeah. So we're going to go with this. How much could we lose here? The entire amount we're paying for this option. But the goal of buying more time is to minimize the effect of time decay. And, the expectation is if we're paying more, hopefully when we sell it, we'll sell it for more. And so we're going to actually buy custom with an OCO bracket again. Because when we do a swing trade, the way we are going to do our exit, we're going to say, hey, if this thing loses half its value, it's either not going in the right direction or it's lollygagging about, like it's not moving fast enough for us. Okay. And so if it loses half its value, we're going to get out. Now you might say, well, why aren't we doing 2 contracts then? Because if we're getting out at 250, then, and we had 2 contracts, we're down by 500. Well, what if it gapped down? We could lose this entire amount. And so we're position sizing conservatively. And then what about our target? Well, we could make a guess as to what this amount might be, but what we're going to say is we're going to make this a market target based on the price of the stock so that we can kind of do more of an apples to apples comparison and say, hey, same target as for the stock position. If and when it gets to 75, let's call it a day. Okay, and we're doing one contract here. So here we're risking $500. Well, 490. Okay, and we're going to put this in our long call group. And then we're going to say that this is a swing target. This is just a note from us to us. And we're going to compare it to our stock position with the swing target. Okay. Yeah, somebody's saying, so would you exit the option trade if we're down 50%? On this one, that is our trading plan. Now, I don't have a trading plan in the trade management mini sessions for swing targets, but I have added it to my list. Yeah. And this week, I may not get very far on the list. So I will be posting on X later today, and it's a way for me to communicate with you outside of classes like this, but I'm teaching an extra 5 classes this week. I'm teaching Rachel's long options class tomorrow since she's going to be out of the office. And then Kevin Horner is also gone tomorrow. I'll be teaching his building a stock portfolio class. And then on Wednesday, Scott will be gone for the first time. He'll be missing his class on Wednesday, the getting started with stock investing. So I'm going to cover that. And then Ben's trading index options on Wednesday. And on Thursday, I'm teaching Connie's long vertical class. Now, the long vertical class, I will place those trades in this account. So it's like a bonus, you know, trading a smaller account class. So AP 514 is saying the strike is not the same. The strike is supposed to be the same. Did I not make it 75? So let's go to AAA. The strike is 75 on this one. And on AAA, if we come and look at the weight condition, it's 75. So the target is the same. Yeah. Okay. Okay, so let's go and do another example trade. So that was AA. How about we look at Apple? Another AA, AAPL this time. So, you know, when we look at the last year, it's gone from 189 up to a high of 288, and then it started consolidating, and it's been consolidating, you know, since December, which if you own Apple may feel like kind of forever, right? Yeah, so, but we had this kind of weird double bottom type pattern setting up. And today we've got this diagonal resistance breakout, which started on Friday. And so if we look at this, we do have earnings coming up, and that's in a couple of weeks. And you know, sometimes like it doesn't matter how extraordinary their earnings is, they can get hit, and the market doesn't always react favorably. But the last earnings announcement, you know, it responded bullishly and had a nice move. And this earnings announcement, well, the next day it kind of pulled back and started consolidating for a week or two, but then it went up and hit a new all-time high. And so, you know, this is kind of a longer term, some might not say, and Scott, you might be with me on this, like it's not a classic swing trade in that it's not, you know, a bull flag where we're trading it back up, but we're trading it. This one, we might be better to say we're just trading back to a previous high, you know, around here, around this 288 mark. And so, and we might want to give this a longer term horizon. And so instead of a long call, which if we get a short-term pullback after earnings, you know, it could be ugly, you know, and we could get stopped out. Maybe we just do a stock position, and you might say, like, did you notice this is a, you know, $272 stock, and we have a $25,000 account? Well, we could buy like 18 shares. and you might say, well, it hasn't come back to retest the support level. You're right. So it could come back and this could turn out not to be a breakout. It could turn out to be a fake out. And so you might say, well, I don't want to take it all the way back to 243. Well, we could say, well, if it comes back to, say, this, I don't know, 267-ish level around here and goes 3% below that, we might want to consider exiting around 258. Actually, it came to 258.99. And what some people will do is say, I'm going to take a stop off over earnings. And why would they do that? Because sometimes you end up with something that will gap down on the open and then it'll rally throughout the day and it'll come down far enough to trigger your stop. And then it will rally and you wouldn't have been out. And so come April 30th, just before that, some traders may choose to take their stop off or replace it with a protective put. Now, we're not in the snack bracket where we can buy 100 shares. Yeah, we're only going to buy 18 shares. And for that reason, some might say, well, I'm just not going to place this trade. And what I used to do when I was, a client watching these webcasts is sometimes I would come in and I would write in the notes. I would say, okay, I'm going to place this trade just to follow along, but I'm going to put in the notes that I wouldn't have placed this trade, because of some of the reasons I've just gone over. So we're going to do 18 shares. We're going to make our target 288. So the previous high. We're doing a stock position so that in recognition that it could take a while. And we're going to put our stop at 258.99. And our target is our previous high. And we're going to hit send. So 18, our position size, $4,909. 18 shares we want to get up if it goes up 15, 24, or if it goes down 13.77, which, if I call 14 times how many shares? 18. That's $250. So if it gapped down and stopped us out, we still haven't blown up our account. Okay. Oh, yeah, we did the at the money call. Somebody was asking, the strike on the call is 70. Yes. Yep. Okay, let's come and have a look at CRM and Microsoft. Like, they should be paying me, to place because anytime we've done a short call vertical, the stock rallies. We did the same thing on Netflix. It was downtrending for months. And so we did this short call vertical. It had broken this support level. It was trading below. Let's see, what day did we put this on? Let's come down. This is CRM. Okay, April 10th. April 9th, April 10th. Okay, so we have a stock that's down 30% year to date. So it is downtrending. This is the day we put this trade on. So if we look at this, because I think there's a lot of value in looking at things from a post-mortem perspective and say, if I were to look at this again, it kind of started going sideways, broke to the downside. And this was one of those, is this a breakout or a fake out? Well, it's now back in the middle of this range and it could come all the way back up here. We only have till May 1st. And this is in the money. And remember that when we look at CRM, because this is a short call vertical, we've sold the call saying, hey, if you want to buy this stock from us at 175, No problem. We'll sell you 100 shares of CRM at 175. Now, do we own CRM? No, we don't have a single share. So if you sell a call and you don't own the stock, you've got unlimited risk. Because what if news came out and it went up to like 250? You'd have to go out and buy it at 250 because you've agreed to sell it at 175. Now you have blown up your account. So what we did, it's called a short call vertical, is we went out and bought the 180 that said, and now it's trading through both strikes, but we have almost 2 weeks to expiration. So if we come to our monitor tab, and when I first started trading, I just thought like, oh my God, it's through both strikes. I now have my max loss, so I may as well just wait and see what happens because, I've lost my $500 less my $1.22, but we're at 327. We could lose another $175 on this. And so I say to this, I would rather lose 200 than 375. Is everyone with me on that, or would anybody prefer, to lose 375? Yeah, no, I don't think anybody'd go, no, I'd like to lose more, please. And this could turn around and come back down, and come May 1st, it could be trading underneath. But, is this now a lower high? Like, no, it's at least a similar high. And so when I look at this, I was expecting, a lower high. I was expecting it to, if it came up, to bonk its head here, not here. And it may not even stop here. So if it goes up here, then it could go to here. So I think with this one, we say, this is not what we were expecting. I listened to a podcast one time, and I forget who it was that said it, but he was a very successful trader, and his thing was, you're going to be wrong probably 30 to 40% of the time. And what separates those that are ridiculously successful long term and those that used to trade and no longer do is those that admit when they're wrong quickly. And so we were wrong. So we're going to come out and cancel and replace this. And instead of buying it back for the 24 cents we wanted to, we're going to pay, well, now they want us to pay 348. Okay. That's our short call vertical. Fire in the hole. Okay, so we're out of that one. And then the other one was Microsoft. And this one, I made a mistake. So I'm going to go in and correct this because we should have only done one contract here. And so we should be down by 200. So I will fix that after the class. But our strikes were at 385 and 390. But today, it looks like it may be starting to pull back. So with Microsoft, it came up, we were expecting it came up to this high and went through it. So we're, this could come down for 2 or 3 days. So we are going to watch this one like a hawk. But if it starts to rally tomorrow, we're going to lick our wounds and close that one also. And if it pulls back for 3 or 4 days and, we've mediated a little bit of the loss, like, we're up $20 today. If we're up 20 or 30 tomorrow and another 20 or 30, that beats a poke in the eye with a sharp stick. So if we can, try and moderate the loss, we'll do that. And some might just say, like, I got a busy life, I don't have time, you could go ahead and close it. Okay, so those are the 4 I wanted to review today. All right. This one does not begin with the letter A. It's not going to be our 4th example, but just if you wanted to look at something that was interesting, we did a trade on Nebius a week or so ago, and it worked out well. And then it continued screaming to the upside, and it's pulling back. But in our candlestick theory with this one, we'd want to see confirmation the next day. So maybe we look at this one. I don't know. In one of our classes tomorrow, maybe we look at that as in our long option class tomorrow, since I'm filling in for Rachel, or in our getting started with technical analysis. But I just thought this one might be an interesting swing trade if we have that candlestick. Now, a more aggressive investor might say, I'm ready to pull the trigger. Well, whatever your rule set is, sometimes you can pull the trigger and shoot yourself in the foot. You got to keep that in mind too. Okay. So, and then our last example trade for today, again, sponsored by the letter A, AEP. Now, we've got earnings coming up here on May 5th, but we've got about 2.5 weeks. And so, and this is a truer swing trade, where it's like we had a 4-day pullback, kind of this bull flag pattern. Today, we have a close above the high of the low day. Yeah, close above the high of the low day, which many traders or some traders might call an entry, because we have this hammer at a potential support level. And then today we have this follow through, which if you go and watch the mini sessions on the candlesticks, with this candle, we're looking for confirmation. Now this candle's still live, but could we buy? And again, could we do a long call? We could. Could we buy shares? Well, we still have, we've got 4,000. We could buy a few shares, or we could just do that long call. So let's do the long call. Yeah, wipe the slate clean. Or let's see if that's a choice for us. So if we came out to June and we come back to Barb's Basics, so we've got almost 1,700 contracts, a 20-cent bid-ask spread, so, it's meeting our criteria with our at the money strike. It's under $500. So we are looking to buy, and what is our target? Our target is going to be 137. And then with a swing trade, our exit is pretty easy, because we're saying, hey, if it loses half its value, we want out. So we're going to buy custom with an OCO bracket. Our target is going to be based on the price of the stock. So our target is going to be 137. $137. And our exit is going to be at a 50% loss. And again, we're erring on the side of caution here, because if it gapped down, we could end up out for much less than the 235 that, we're expecting to exit for. So we're risking 235. Our max loss is 470. The system doesn't lie. It's saying our max profit is infinite, but we're saying, hey, if it goes above 137, this says if it goes below 0. That was a boo-boo on my part, but we can leave that in, because if it goes below 0, I guess we'd have lost our money and we'd want out. And we're going to put that in our long call, and this is a swing target. Okay. So I've talked a bit about the trade management mini sessions. So this is where I'll say, if you haven't subscribed, if you're new and you haven't subscribed to the Trader Talks channel, you're going to want to do that. Trader Talks from Schwab Coaching on YouTube. I'd also like to ask you to hit the like button, because if you hit the like button, it helps move things up in the trading algorithm so more people can find this content. It also sounds like applause to Scott and I, so we appreciate that too. If you come down to playlists and then start scrolling down, here's the mini sessions. And the first group is these shorts on candlestick patterns. So I talked about the hammer, like that one's 5 minutes. Some of them are 2 or 3 minutes long. Then I've got a bunch of example trading plans here. And then if any of you are new to this class and haven't seen it before and you want to know how to add notes and where to access them, I just re-recorded that one. Also, how to customize your chart by adding a script like that month today, week today. I showed you how to add that and then how to customize your watch list with scripts also. So you can come and give these a quick watch. Like, instead of Netflix, you can do some binge learning. Yeah. So that's that. The one question when we do have a survey, and I believe there is no survey today, but one of the most asked comments, other than how do you find your trade setups, is could you please review what we did? So today was swing trading day. We did a long call on AEP. We did a stock position with a target of a previous high on Apple. We did 2 trades on Alcoa, ticker symbol AA, a stock position and a long call, which we will compare and contrast in upcoming classes with a swing target. We reviewed the trade on Costco that had hit our target, and we decided to exit CRM. We admitted that we were wrong on that one. We also reviewed the trades on NVIDIA, AMD, and Microsoft. So we packed a lot into our 45 minutes. Thank you for joining us. Thanks to the guys behind the scenes who helped bring this class to life. Thanks to Scott for riding shotgun in the chat today and helping out. And thanks to each and every one of you who continue to show up every Monday and Friday and help bring this class to life by being so participatory in the chat. If you're watching this in the archives, if you put a question or comment into the comments, I look at those on the daily. Stay tuned. Mr. James Boyd coming up next. You won't want to miss it. Bye for now.